All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, May 18th. Futures market just opened. Before we dive in to look at charts, reviewing last week's trading, ended up having a gain last week of $6,467.50 with 8 wins and 4 losses. Total of 12 trades right there, 13 technically, because I had one that I got in and out of at the exact same entry and exit price. So it was just a total wash. So 13 total, one tie technically, 8 wins, 4 losses for the week. Again, gain of $6,467.50. So going out and looking at the charts, let's drop in and look at our ETFs since we've made the switch into that since the start of the year. And honestly, I am a little surprised that we have not gotten a pullback yet. We have been in overbought territory on our RSI for quite some time. Our MACD has just been at a 45-degree angle to the right upper corner, which is signaling continued momentum. But eventually we are going to need to reset this, and I am not super interested in playing the top side of this, except for if we get some kind of consolidation for 2 or 3 days or some kind of a pullback. So my base case at this point is we are likely to come back up and retest the highs around $613 on SPY. But what I would personally like to see happen is some kind of a pullback into this 580 mark, somewhere right in there, lining up with the 9 EMA to reset this price graph just a little bit. But I do think that price is going to stay between 580 and 613 this coming week. Going out to the triple Q, pretty much the exact same thing on our RSI and MACD. Ideally, I would like to see this pull back down into the 9 EMA. We do have a little bit more constructive of a pattern here on triple Q versus the SPY. We have kind of had 3 days of consolidation, Wednesday, Thursday, Friday last week. This week, we are probably going to see prices come back up and test that 540 area. But again, anywhere between 505 and 540 is my base case for the triple Q this week. Going out to IWM, I am assuming we are going to break our diagonal resistance line that we have overhead and probably come back up and test the underside of the 200 period moving average on the daily chart. I would be surprised if we move higher than that 200. I'm guessing we are going to have resistance hold there and then kind of chop between 210 and 215 from that point on. Going out to Dow Jones. Dow Jones actually spent last week consolidating right at its 200 period moving average and actually broke out on Friday and also closed just right at the previous pivot point here on the daily chart. I do think that we are going to resolve to the upside, but I would like, again, a little bit more consolidation before the next blast off. Don't know if we're going to get that or not, but I do think that 440 is in play and then probably 450 for upside targets. Going out to IBIT. IBIT consolidating over the last 4 or 5 days here and threatening to break out. I am expecting that we are going to come up and test all-time high and probably break through the all-time high this week or next. I am guessing it's probably going to happen sooner than later. My bet would be on the next couple of days. By Wednesday for sure, in my opinion, I think we are going to be back up and testing all-time high at 61.75. And from there, it is open air to the top side. And I do think that momentum is going to take hold here over the next month or two. I am expecting some significant movement in Bitcoin, whether or not this push is the one that gets us there or not, or if we meet some resistance here at 61.75 on IBIT, we'll have to see. But there will probably be some profit taking up at that high level. But I do think eventually we are going to resolve higher on IBIT. Going out to ETHA, this is the Ethereum ETF that we track. Basing basically right at the 200 period moving average. I am expecting a breakout on this, probably coming back up to the 2250, 2260, somewhere in there this coming week, and then continued momentum, continued recovery on Ethereum in the weeks ahead. It does still have some catch up, even though we had a massive, massive last couple of weeks. I do see catch up continuing to happen in this space relative to IBIT and Bitcoin. So continuing to keep an eye on Ethereum for potential patterns, and a break above that 200 period moving average as a continuation pattern looks pretty good in my opinion. Going out to XLB. Honestly, this week probably coming back up and retesting the underside of the 200 period moving average. I'm assuming the first test on that is going to hold, but that does give us price appreciation, hopefully up to around 89.20. To the downside, immediate support 85 and then 83.75. Going out to consumer discretionary. Consumer discretionary had a nice little high base here. Hardly any profit taking, even after a really nice push higher and being overextended to the top side. MACD is continuing to signal bullish momentum, and we are pushing right up into the underside of this important support and resistance zone that was also tested right here. Also tested right here. So we are closing in on that 220 level that is going to be very, very important to the market. I do think that we are going to break through to the top side on that, but it might take a few more days towards the end of this week, if not maybe beginning of next week. Going out to XLK, technology sector. Technology sector here, I would love a pullback. I don't think we're going to get it here. I think we are basically just marching up to 243 to retest highs, and I do think we will eventually break that, but my guess is we are going to come up, hit that level, pull back, and kind of chop between 235 and 245 for a little while, and then eventually reset and break to the top side, breaking out of that 245 level and probably hitting 250 for the next target. Going out to XLE. XLE is starting to shape up here. I'm going to clear out our old drawings and stuff, clear out our alerts so we can see the chart. Putting our cursor right on the 200 period moving average here, that comes in at 88.70. I'm going to set a new alert right there. I do think the price is likely going to push up and hit that level sometime this week. So that gives us about 3.5% to the top side. And depending on how price shapes up on that, I wouldn't be terribly surprised if we do break through that. But we do have a little bit of oversupply in this area still to work through. So we'll see how the market handles that and digests that. But I do think that the bulls have a little bit more of an edge this week, just overall in the market. So I am expecting this price pattern to resolve to the top side as well. Going out to XLU. XLU broke out last week on Thursday and Friday of our resistance level. Coming back up to 83.40 seems likely. And if we drop this out to a longer time frame chart, we can actually see that would be considered an all-time high. And honestly, a double top there and a little bit of consolidation is probably my base case for this. So just a stone throw away, about $1.20 more to the top side. Not enough room, in my opinion, to really have much play here. I think we've missed the boat on this one, so I'm not going to be paying attention much to XLU this week. Going out to consumer staples. Consumer staples, I think we need to put on a weekly chart to see. And right here, you can tell we are just in the midst of a bunch of choppy nonsense. I wouldn't be surprised to see us come back up and retest this 84.50 level, but I'm not super interested because there's just not a really clean pattern in this area of the market right now. Going out to XLC. XLC is just on a 45-degree angle march higher. I'm not going to be surprised at all if we end the week retesting back up to the highs around 105.50. If we go out to XLI, we actually are just a few cents underneath, about 60 or 70 cents underneath the high price of 144.51. I am expecting us to tap around that or maybe even break slightly above it and then probably pull back and retest the 9 EMA down here around 140. Going out to XLF. XLF, we tossed this out to a little bit longer time frame. You can see we had that really dramatic sell-off over the last couple of weeks for tariffs and whatnot, and then, over the last few months, and then over the last few weeks, we've recovered back almost all of that and are just a stone throw away from all-time high. This is kind of the theme throughout the majority of the market right now. I'm not going to be surprised if we come back up and retest that 52.60 level on XLF and then kind of chill out for a little while and decide if the market actually wants a deeper correction or if we are looking at breakout territory at that point. Going out to XLV. XLV coming off the bottom of the chart here. If we drop this out to a 1 year, you can see we are still at the low ends of XLV. And this makes sense if you think about it because it's more of a defensive area of the market. People are going to spend money on healthcare even if the economy isn't doing very well. And so defensive seems like a good place to be when the market is melting down. But when things start to recover, people are dumping that. They no longer want the safety of dividend plays, and they are then looking for larger growth stories. And there isn't as much of a growth story in the healthcare stocks right now. So it doesn't surprise me that it's struggling to come off of the lows down there. I'm not super interested in it, even though it does probably have a chance to bounce back up to around 140 on the daily time frame. Going out to gold, gold actually threatening to break down on a double top pattern here. If we kind of zoom in, you can see a little M for murder formation here. And usually that resolves to the downside and ends up going to the downside about the same depth of that pattern. So right here, we had a depth of about $22. Going down from that, 22 would actually put us right into this very important support and resistance line. So my base case is honestly, if the stock market holds up and continues its march higher, we are likely to see gold break down on the 50-period moving average and come back down and retest that 275 to 280 level. That being said, I'm not getting out of any long-term positions in gold. I will be looking to add to my positions for longer term if we do get a significant dip. But for now, I am just writing covered calls against my stock positions in that area of the market. And then if we go out to silver and look at silver real quick, it's just kind of in the middle of no man's land. Not really a good pattern one way or the other, just kind of in the middle of a choppy mess. So not interested in silver this week. Last but not least, let's go out to dollar. US dollar came off its lows, but still struggling and has not broken back above the 50-period moving average yet. Honestly, base case for it is just continuing its consolidation between 101.78, let's say, and on the bottom side, 117. So with that, let's drop out and go to our heat map real quick. This is a 1 week performance of the S&P 500 from last week, and you can see almost everywhere super, super green just across the board. Really good week, except for a couple of earnings misses. We had UNH that just got absolutely killed, 23% to the downside. CVS down 6.6%. HUM down 4.6. So other than just a couple of very specific news stories, the rest of the market did really, really well last week, and money has been flowing back into the market over the last few weeks. And then last but not least, going out and looking at Forex Factory for our economic calendar for the week ahead. Nothing on the economic calendar here except for Thursday unemployment claims and PMI data on Thursday, just before market opens and just after market opens here, 5:30 and 6:45 a.m. Pacific Standard Time. So just keep an eye on those. But other than that, it's going to be a really technically driven market this week, which is going to be a nice reprieve from all of the economic data that we've been battling over the last couple of weeks. So with that, guys, as always, trade safe. Let me know if you have any questions. Hit me up in the comments. Give me a like and subscribe. Would really appreciate it. And I will catch you guys next time.